Hi guys, Rolson here, and in this video we're going to talk about Bitcoin. Old Grandpa Bitcoin, the OG of cryptocurrencies. This is an interesting starting point, I think. This is the best starting point. This is where everyone starts when they go into crypto, looking into Bitcoin. Bitcoin is the biggest one, and it's good for explaining why cryptocurrency is interesting and can be a good investment in the first place. So I want to start out with that. Before talking specifically about any other cryptocurrencies, I want to go into detail with Bitcoin and why I think Bitcoin is a good investment. Why is the biggest part of my portfolio, and I'm going to try something new. So instead of me preparing a giant script that I'm going to basically read to you guys, I'm going to go through all of the material that I would go through to write my script while I'm talking about it. So we're kind of doing it in real time. So the first thing that you need to understand about Bitcoin is why it can be used as money in the first place. So I talked to about a month ago, I talked to a guy that I know that I perceive as being extremely intelligent. When I mentioned Bitcoin and we started talking about it, he was like, I don't really understand what it is that you're investing in when you invest in Bitcoin. There's nothing there. Like, there's no company. It just seems like you're investing in air, you know? What is the assets that you're actually investing in? It's hard to wrap your head around. You need to understand value at a fundamental level. And that's not a technical thing. It's not a digital thing. It's just a thing. Value is just this esoteric thing that basically we create as humans. We create value. Value would not really exist without us. Because value is something that is subjective, something has value to you, but it might not have value to someone else. And so value is this weird thing that, just like when you say it's hard to understand what you invest in when you invest in Bitcoin, value is kind of the same thing. It's kind of this, it's air. Like, what is it? What is value? What determines what is valuable and what is not? This has led me down a rabbit hole so deep. I got into something called Austrian economics. I read a book on Austrian economics, which is a whole another school of economics than the one that I was taught and most people is taught in through their education. The basic point there is that value is subjective. It depends on who is valuing the thing, what the value is of the thing. So there cannot be any general value of anything, but something can have properties that makes it very valuable to most people. That is the case with something like money. This is very important to understand why Bitcoin is valuable and why it might be a good investment. What is money? And why is money valuable? Why is a paper bill valuable? Why does that have value? Well, basically, it's because we all agree that it has value. And because we all agree that it has value, you can always exchange that money. Let's go back in time. Humans have always been trading. We have been hunting and gathering and farming and trading with each other. So if let's say that you grow crops and you grow wheat on your farm, and someone else has a farm where they have some grass and so they have goats. Now you would like some goats and the other farmer would like some wheat. And so you trade. So that is a natural thing that has evolved throughout human history, that we are trading with each other. And money kind of evolves from that at some point you will find an item or an object that is just more exchangeable than any other object. So if someone does not want weed, then you cannot trade with them in that situation. So if you don't have something like money that you can always exchange with someone, then you have a problem because you're not going to be able to trade with anyone. So let's say that you want the goat and you have weed, but the goat farmer does not want your wheat, but he wants a cow. So what can you then do? You can go to a guy who has cows and you can trade some of your wheat for his cow if he wants wheat. And then you can go back to the goat farmer and trade the cow for the goat if he wants a cow. It would be much more smart if you just agreed that you have this shiny coin. When you pay the goat farmer with that shiny coin, he can then go and buy the cow with that. So instead of you having to trade for the cow and then go back to the goat farmer and trade the cow for the goat, he can just go and buy his cow for that golden coin because everyone agrees that this golden coin is worth something. So that is how money naturally evolves. And money has been a lot of things throughout time. It has been like seashells and glass pearls and stuff like that. And eventually at some point, we discovered gold. Gold is a very good kind of money. And there's some reasons for that. And that's the first thing that I want to go through. You want money because it's more effective. So you won't have to go and sell your wheat for a cow and then sell the cow for a goat. But you can just go straight to the goat farmer instead. That's why society and humans want money, because it's just more efficient. Okay, so if we can agree on that, then we can go and look at then what is good money? What constitutes a good object? Like I said, why is the paper bill good for that? Or why is gold good for that? Because gold is the first real kind of like real money, I would say, that we have had in society. It's because it lives up to these criteria. These are widely accepted by economists worldwide. So let's just look at gold through these 6 criteria. So portability is the first one. Apart from its acceptance, like money has to be accepted by everyone, that's the first one, but it's not really a criteria. General acceptability is kind of an invisible 7th criteria, and I say that because if all the other 6 criteria here are met, then it will be generally accepted as money. Portability. Apart from acceptance, good money also requires portability. If people can carry or transfer money from one place to another, then it's good money. And this makes very good sense that if you want to trade with people, you want to be able to trade on the fly. So like if you're traveling, let's keep our discussion in like the past, because we're talking about gold. So imagine you are having to travel by boat to another country, for example. This could take like weeks or months even in these times. So imagine going to another country and discovering, oh, over here they have this crop that we've never seen before. And so I really want to buy some of this crop and take it home to my homeland. And because I think I can sell it for a lot of money back there because it's so scarce and people have never seen it before. Imagine now that you would have to actually go back, take that like 2 months trip back, get your gold because it's heavy as fuck, right? And then you carry it back on the boat. Like now you're up to like 4 months time before you can actually trade, because you wouldn't carry gold around on you because gold is heavy as fuck, as I said. This is actually the only problem that gold has. It's the first criteria, portability. Gold is not very portable because it's really heavy. And this is why the paper bills have been created. But let's get back to that. So, but it is possible to transport gold. It's not very handy, it's very heavy, but it is possible. It is portable. Durability. Acceptance and portability aside, the material used to make money must last for a long time without losing its value. For example, ice and fruits are not good money since they lose their value quickly with the passage of time. After all, ice melts and fruits perish. Therefore, durability is an essential quality of good money. Now, this makes very good sense, right? That if you have some money, if you've earned some money, you wouldn't want that money to like go bad or rot. Like in the example here, if you used fruit as money, that fruit is gone in like a week. And so you would have to spend it within that week. So that's really not that good money. If you want to save up money, that's not really good money. So durability is important, and gold is extremely durable. It cannot really be destroyed. It can be melted, it can be made into something else like jewelry or something like that. It can be mixed with other kinds of metals, but it cannot really be 100% destroyed. And it doesn't go bad with time. It can like stand the test of time for a very, very long time. So gold is very durable, and so far it's pretty good money. Divisibility. Talking about the qualities of good money, it's important to remember the divisibility of money. If someone wants to buy a smaller unit of a commodity, then divisibility of money can make it possible. For example, cows cannot function as good money. This is because you cannot divide a cow without making it lose its value. So this is another great point, that you want something that you can divide into smaller units so that you don't have to make like wasteful trades, I want to say, where you pay too much for something because you cannot like divide the money into smaller parts and pay the correct amount. Homogeneity. Look at two 100 rupee notes. They look and feel identical, right? They also have the same value. In fact, nobody can distinguish between two currency notes right out of the mint. This is an important quality of good money, homogeneity. If money is not homogeneous, then transactions will become uncertain and people would be unsure what they are receiving. It's another very important thing, that if money doesn't look the same, if one $100 bill doesn't look like another $100 bill, then how are you going to check that it's actually valid and that it's actually, valid? And so again, gold here fits this perfectly. Gold looks like gold, and you can clearly see if it's been like watered down with other metals or something like that. So cognizability, the ability to recognize money, is critically important. Today we can look at a currency note and tell its value. If money is not cognizable, then people can find it difficult to determine if they are dealing with money or some inferior asset. And this is kind of the same thing, or the same alley as homogeneity. You need to be able to recognize that, oh, this is gold, or oh, this is $100 bill, or whatever. And so again, gold is very recognizable. It cannot really be faked. How is gold formed? Unlike other metals that form in the Earth's crust, gold comes from space. Stars are made mostly of helium and hydrogen, which provide light. Inside the star's core, nuclear fusion churns out energy. As the star's life comes to an end, a massive stellar explosion occurs known as a supernova. The pressure of a collapsing star is so intense that it forces protons and electrons to create a neutron. Since neutrons don't have any repelling electric charge, they are easily swallowed up by heavier elements such as iron. As the iron gathers more neutrons, heavier elements form. But how did all this space gold end up in our home? Planets form from a swell of gas and dust cast out through space via a supernova. The gold particles were likely mixed up in the cosmic cloud that formed Earth. Fast forward a few billion years, and we now mine this precious metal to make jewelry, computer chips, false teeth, and more. Gold comes from outer space, from when a star explodes in a supernova. So because gold comes from outer space, it is scarce. Like, there's a limited amount of gold and you cannot create any more. The alchemists tried. When you see gold and you can verify that this is actually real gold, then you know that it's real, that it's not artificial. And that's a very important part of this homogeneity and cognizability. That is why gold is good money. Stability is the last one. Of all the qualities of good money, stability is probably the most essential one. The value of money cannot change for a long period of time and hence remain stable. If the value of money keeps changing, then it will fail to function as a measure of value and as a standard of deferred payment. And this is maybe where some people have difficulty with Bitcoin right now. It has to be stable, because if it keeps doing this in value up and down, then it's not really, it becomes very difficult to say, okay, is this gold coin, is this worth 1 cow or 2 cows? Because it might be worth 5 cows in next week, or it might be worth like 0.5 cows next week, because it's very volatile in value, which Bitcoin is right now. And so because there is a limited amount of gold, it will be relatively stable. Eventually, all of the gold that we are able to dig out of the ground will be dug out. Then that is just the amount of gold there that is available in the world. And so the value will be kind of constant from that time on. So this is a very simple supply and demand graph. So what you see here is here you have P, which is the price of something. And over here you have demand on a curve here, and you have supply on a curve here. So the price of an object will always be determined by supply and demand. So where supply and demand meets each other, which means that, let's go back to the goats and cows. So for example, in the example that we have where I want to trade my wheat for a goat, the goat farmer for some reason does not want wheat. So his demand for wheat is basically 0, but my supply of wheat is way higher than 0. I have a lot of wheat that I want to sell, but because there's no demand, the price is 0. And these are the forces that drives prices. So if his demand was 1 bushel of wheat, he just wanted that bushel of wheat and he was willing to pay 1 goat for it. And my supply and demand looked the same, that I wanted 1 goat and I wanted to pay 1 bushel of wheat for that goat. Then our supply and demand curves will cross each other, and right at that point where it's 1 bushel of wheat for 1 goat, we will make a trade. Let's say he wanted 2 bushels of wheat for his goat, and I didn't want to pay that, then we wouldn't make a trade. Until he was willing to drop his price to 1 bushel of wheat for 1 goat, then we would trade. And so prices always are in this variance, but whenever they hit that cross point where seller and buyer agree on the price, a trade will be made. And whenever a trade is made, the price is kind of realized. It becomes real. Before the trade is made, the price is just like something in our minds that I would be willing to pay. Like, how much would you be willing to pay for this phone, for example? That is how prices work. This supply and demand always is in flux. And sometimes for you personally, something hits a price where you would be willing to pay that price for it. And so you make the trade. And by that point, it's kind of locked in that at this point in time, the price of this good was this, because a trade was made at that price. That is how prices is determined. And that is why when the supply of something is limited, when there's only a limited amount of something available and there cannot be made any more of it, that's an important part of it, then the price will be relatively stable and the price will be high. The price drops whenever you can increase the supply. If you cannot increase the supply, if the supply is fixed, then the price will be high and it will be stable. That's why gold is so good to use as money. And that's why gold has been used as money for a long time. At some point in time, some very clever businessmen thought that this problem of portability with gold could be solved. And so they thought, but what if we just held people's gold for them? And instead we gave them this receipt, this paper bill that said that they had an amount of gold. And so they could also always come back to us and exchange this for gold. Just like with a check, basically. You write a check, you say, give me your money. I'll write you a check that says that you have this money with me. You can come back to me and exchange this check for the money if you want to. But you can also give that check to someone else and then they can come and exchange the money. And so now you can trade the check instead of the money. And that's basically how like bills and coins came into the picture if we look at history. So first we had barter system, commodity money, metal money, paper money. So now we're about here. These businessmen created this gap or this evolution from metal money, which was gold and other like silver and other metals, to paper money. Because if we go back to this thing, that is way more portable. So they had basically solved this problem and said, okay, we have gold and other metals. They fit all of these criteria, but they're not really that portable. That was when paper money came into the world, and that's the system of banks that we know of, central banks and private banks, that all came out of this business idea that these businessmen had way back in time. Okay, so fast forward to our times. So now we're in 1971. A very, very important thing happens here. that is President Nixon, takes us off what is called the gold standard. And what that is that up till this point, every dollar bill was backed up by real actual gold. You could at any time say, I don't want this dollar bill crap anymore, I want gold instead. You could go down and actually cash in your dollars and get your fucking gold and take it home. Nixon changed all of that in 1971, where he removed this gold standard and removed this link between gold and these bills. So now money was no longer backed up by an amount of gold. Now money was basically just backed up by the government saying that this money has this value because we say so. And what that did was first of all, it allowed the central banks to print all of the money that they wanted to. And by doing that, they create inflation, as we know from the supply and demand curve. So you see here, this is actually an illustration of a change in supply. So if the supply goes up, then you will see the price here go back. That is where inflation comes from. When the central banks print money, the supply of money is increased, and so the price of the money drops. So what we have right now is a money system where the money that we hold are constantly devalued by central banks. And so what we have seen since 1971 is that they just keep printing money. The latest example was COVID-19, when COVID-19 hit and the US economy was hit by it. What did the central bank do? They printed a whole lot of money to just save the stock market, basically. And they just devalued the money of the people. So this is just to get back to this whole evolution of money and all of the qualities of money that we're talking about. This is to say, until the point where in 1971 we was removed from the gold standard, money was actually pretty good because it fit all of these criteria. It was very portable because now we had paper notes. And later it evolved into what we see here, digital money with credit cards, which is just extremely portable. And it had all of the other criteria as well, because basically it was gold that we were carrying around with these dollar bills that we had. But when they removed the gold standard, they fucked up this entire system. It's something that is not talked a lot about. You have to really read up on it. It's starting to come out now because Bitcoin is becoming so big. The information is starting to get out there. That's why I picked it up from people that I follow online, started talking about it, and I was like, hey, that sounds really interesting and like something that you should really pay attention to. And so I started reading up on it, and I was like, holy shit, is this real? It is real. It is fucking real. President Nixon in 1971 basically decided to fuck the people by removing the link between gold and dollars and fucking up these 6 criteria for what good money is. So the money that we have right now is missing this. It's missing stability because it's not going to be stable in the long term if you have central banks that can just print as much as they want. And it also destroys this whole concept, this beautiful concept of gold. Like I talked about, that gold comes from space. It's very hard to make, to falsify. It's ultimately a scarce resource because of that, which means that the price can stay stable. They fucked this up by printing money, because if you can just keep printing more and more money, then the money is not really that valuable and it's not going to be stable in the long term. There's a very interesting website called What the Fuck Happened in 1971. You can go in here and see how basically all of these different graphs show some very interesting changes right around 1971. So one here is, for example, the productivity rate, like the growth in productivity of like how many resources do we produce. And then the compensation, which is like how much are workers paid for what they produce. So what you can see here is that from 1948 and basically until 1971 or 1972, those curves followed each other. So whenever we produced more, we were paid more as workers, which seems very fair. But since then, since we were moved from the gold standard, the productivity has continued to rise, but the compensation that workers are paid for what they produce has fallen. I hope by this point you understand that we have moved from systems of money that was not really good, like barter systems and commodity money and metal money, which was better but not really that good, until paper money, which was really fucking good, and plastic money, which is also amazing, except for the fact that we were removed from the gold standard, which then fucked up this whole system of all of these 6 qualities that we want money to have. Bitcoin solves this problem. This is why Bitcoin is valuable. Bitcoin is the next step in this evolution, just like it's here, cryptocurrency. And it is that because if you go through these criteria, Bitcoin is extremely portable because it's digital, it doesn't weigh anything. Like you can send it to the other end of the world in a couple of minutes. And so it's very, very portable. It's stored on the blockchain. You don't even have to store it yourself. It's just stored on the blockchain. Go back, if you don't fully understand how blockchain works, go back to my videos on the blockchain, because I'm not going to explain how blockchain works here. So you need to kind of understand that to understand what I'm saying now. So it's very portable. It's extremely durable. It cannot disappear. As long as the blockchain is intact, your Bitcoin is safe on the blockchain. It cannot be destroyed. It's not going bad with time. Just like gold, it's extremely durable. Divisible, it is extremely divisible. Like you have one Bitcoin and then you have the Satoshis, which is the, you divide a Bitcoin into Satoshis, which is why you can buy like 0.0001 Bitcoin, for example. So it's very divisible. It's very homogeneous. Every Bitcoin looks exactly the same. Cognizable, yes. Because of the blockchain technology, you can just look at the code and you can see whether the Bitcoin is real or not. It cannot be falsified. There cannot be a fake Bitcoin. You will be able to see that because it's code, it's open source, everyone can look at the code, everyone can look at the ledger, all of the transactions that have been made. So you can trace the Bitcoin back in time through all of the transactions it has been in. Faking a Bitcoin is just not possible. It's not possible. So because of that, Bitcoin actually lives up to all of these criteria in like 100%. It's perfect money. It's not just good money, it's perfect money. This is real. Bitcoin lives up to all of these criteria. So now it's only a question of this, the 7th invisible criteria, as I called it in the beginning, the general acceptability, to finally be recognized as globally good money. Bitcoin has to be generally accepted. This is right now happening at a very rapid rate. I actually have a graph, estimated crypto user growth versus the internet user growth. And just remember, like this is the overall crypto market, but just remember that Bitcoin is the biggest cryptocurrency of all. So what you see here is estimated crypto user growth and estimated internet user growth. This is the red curve, and let's just call it Bitcoin or crypto is the blue curve. So what you're seeing here is that right now, crypto is actually growing faster than the internet was when it was at the same age as crypto is right now. The same thing you see here with crypto growth of crypto assets, which is all of the different cryptocurrencies, versus the growth of websites from 91 to 95. What you see here is the growth of the amount of different crypto assets that you can buy is growing also at a faster rate. So the conclusion here is just that crypto is growing faster than the internet was when the internet came out. And as you might know, the internet has not stopped growing. It's still growing to this day. And is generally used by everyone. That was not completely clear in 91. So if you just imagine that this is 91 and Bitcoin is the internet, this is where we are right now, is that it's not completely 100% clear to everyone that everyone is going to use Bitcoin in the future. But if you look at the graphs, it sure as hell looks like we're going the same way as we went with the internet. And maybe I also need to explain this, because you might look at this and say, well, Bitcoin is not the internet. So can you really compare the internet to Bitcoin? Well, Bitcoin is a network. Because if you look at how a blockchain works, a blockchain is basically a network. Everyone on the blockchain has a wallet on the blockchain. And when you're part of that blockchain, if you own Bitcoin, for example, you have a Bitcoin wallet on the Bitcoin blockchain. That connects you to every other user on the Bitcoin blockchain. And now you can trade with them. That's basically all a blockchain is. It's a network where everyone who's part of that network can trade with each other. It is networks. All of the blockchains are networks, just like the internet is. And having a wallet on the network is kind of the same thing as having a computer that is connected to the internet. So the growth curves can actually be compared. It is actually kind of similar. All of this together is the reason why Bitcoin seems like a very good investment in the future, because you have this asset. It's property. Everything that you can buy and own is property. Like you can buy property, like real estate, like I have my apartment. You can buy stocks. That's also property that you can own. You can buy bonds. You can buy something like gold, for example, or you can have money. That's also a property. That's something that you own. Why is a piece of land, if you buy a piece of Manhattan, why is that a good investment historically? Well, that's because you cannot make more Manhattan. You cannot make more land. You cannot make more earth. That is why land historically is a good investment, because everyone wants to own their own little piece of land, and there's a finite amount of land. And so if you own land, there's a very good chance that that land is going to keep growing in value, because we keep becoming more and more people on earth. So we're more like back to the supply and demand curve. You have a demand that is continually increasing, but a supply that is fixed. A supply that is not increasing. This is where we are with Bitcoin right now. If you accept that Bitcoin is going to be more and more widespread, more and more people are going to use it, there can only be 21 million Bitcoins. It is programmed in a way so that there cannot be any more than 21 million Bitcoins. So it's a finite supply, increasing demand. It fits all of these criteria for what good money is. You have an insane opportunity to buy into something that is probably going to be the standard for money in the future. And now you might still think, well, yeah, this is all fine, but is this really what determines the value of this? And I just need to say, if you go into it and you read up on money, like we've been through the history of money, what has money been historically? Why has money been worth anything? If you look at why is land valuable? Why is anything valuable? It might be more easy for you to understand because those are physical things. It doesn't change that it's this. This is the formula for why money is valuable. It's because it has all of these attributes and it's generally accepted by people. That is it. You don't need any more for something to have value than this. And that is what you need to understand by value, is that it's not just based on the physical materials of something. It's based on these properties, and it's also based on a subjective evaluation of the value of something. And that's it. It's no more, there's nothing else to create the value of something. And it's very clear to see why Bitcoin is going in the direction that it is. But in my opinion, and what I'm betting on when I'm investing, is that Bitcoin is going to keep rising. It's going to hit probably the same market cap. So if you look at the market cap of, let's say, stocks. So the Dow Jones market cap is $10.8 trillion. And let's say the entire crypto market has a market cap of $2.5 trillion. If we're right about the fact that Bitcoin and Ethereum and all of these other cryptos are better property than stocks, for example, because stocks are dependent on the dollar, and because dollar is a inferior kind of money, then stocks are actually right now inferior assets compared to cryptocurrencies. then it's not unreasonable to assume that the total market cap of cryptocurrencies is going to hit at least this and probably a lot more than this. Actually, if you look at the market cap of gold, to just take Bitcoin for example, the market cap of gold is $11.4 trillion. And as we just saw, the market cap of Bitcoin is about $1 trillion. So we still have, if Bitcoin is going to hit the market cap of gold, and I think it is, based on what we just talked about, I think it's even going to surpass gold in market cap eventually, then Bitcoin still has about 10x left of growth, if not 11x, if not 20x of growth left. And so because of also the rate of growth, as we looked at, is growing faster than the internet, this is going to happen very fast. So we're talking like the next 10 years. Within the next 10 years, Bitcoin is probably going to 10x in price. And that's it. That's why Bitcoin seems like a very good investment. It's because it has these qualities. It's because it's growing at such a fast rate right now. It's because you see politicians and banks and the traditional finance system starting to accept it. It's starting to be woven into the regulation. There's laws being made about how society is going to integrate Bitcoin. There are actually countries buying up Bitcoin. We just saw El Salvador not that long ago. That is why Bitcoin is the biggest position in my investment portfolio, is because I'm not that... I don't like risk too much when I invest. I want to admit that right off the bat. I'm a pretty safe investor. Someone who hasn't invested in crypto and is only investing in stocks would say that I'm insane saying that, because basically all of my money is in crypto. But I don't think that Bitcoin is that risky. I think a lot of other cryptocurrencies are very risky. Of course, you shouldn't just watch this video and throw all of your savings into Bitcoin. You should do your own research. Always do your own research on things. This is more of a recommendation for you to actually go and do your own research into this, because it is the amazing opportunity that our generation has, because we understand this. This is something that, like, my parents will never understand this. They will not get to understand cryptocurrency in time. So this is the opportunity of our generation to create a lot of wealth for ourselves in the next 10, 20, 30 years. And I think that the least that you could do, if you really want to help yourself and your family in the future, is to do research on this. There's probably no other investment of your time that you could make right now that would give you a bigger return on your investment than educating yourself on crypto and start getting some money into this space. I just want to leave you with that. And if you enjoy these videos and you like the way that I'm presenting things here on the channel, I would urge you to subscribe. It will help me grow this channel bigger and help me make even more content for you in the future. And if you like the video, of course, also smash that like button and show the YouTube algorithm that you really like the video, because that's very important. And I'll just see you guys in the next video.